So I've been through a fair bit in my life. One could say I've been to hell and back. And today I can tell you it's hotter than hell in California. It was smoking hot today. It was 100 degrees at 9:30 in the morning. Folks in Southern California may complain about that. Other folks will say that's just a March. That's just a day in March for me. But anyway, this isn't a discussion about the weather. Welcome to Covering HOAs with One Hot Mic. I've done a fair bit of traveling over the last couple of days, or a couple of weeks, I should say. I got a chance to go out to Las Vegas and give a presentation for a management firm that does an annual seminar with all of their board members. That was Nevada's finest properties. And then I got a chance to speak at the Dallas-Fort Worth chapter of CAI, Community Associations Institute, in their annual expo. And in both cases, there was some interesting stuff that I came away with. We're going to talk today about directors and officers, errors and omissions, or D&O insurance. This is the professional liability for you, the board member, to protect you in the decisions that you make as a board member for your community. You are a volunteer. You are not getting paid. And sometimes this job, this thing you volunteered for, can be relatively thankless. But it's important to keep in mind that you as a board member are not just volunteering. You're not just standing in as a member of the board or of the community. In many cases, you are the board of directors, a member of the board of directors for a multi-million-dollar not-for-profit corporation. That's what you are. So think, well, if we're talking about for-profit, think Apple. That's a for-profit company. There's a board of directors. That board of directors has to answer to shareholders. They have to work to build the company. So making business decisions in your role as a board member is, simply put, imperative. You can't let, or I caution you not to, I should say, let your personal feelings come into this decision that you need to make. Part of that responsibility in making that decision is to make a decision that is in the best interest of the community, to make a decision that is in good faith. You feel like this is the right thing to do, and to make a decision after seeking the advice of experts. Previous episodes, we talked about risk management and what insurance really is. Insurance is a transfer of risk. If you, as a board member, don't seek the advice of an expert, you're absorbing or you're taking on the liability for that decision. But if an expert provides you with information, provides you with guidance that you follow, you can get that liability transferred to that other party, to the service provider. For example, the arborist makes a suggestion, hey, I really think we should trim these trees twice a year. Following that advice, making a decision in the best interest of the community. Yeah, it's really important for us to trim those trees because one would fall and damage a car, a building, injure a person. If you do those things, you're following what's called the business judgment rule. And it's much easier for an insurance company to provide you with the defense. It's not to say the association isn't going to get sued when something goes wrong. But if you followed those steps, the defense is much, much easier because the assigned attorney, the assigned counsel can say they followed these steps. They listened to experts. They made the decision based on what the experts said, and they made a decision in good faith in the best interest of the community. The settle, or the loss, I should say, will be settled much faster than, and probably more favorably towards the association, if not dismissed altogether, because we didn't do anything wrong. We didn't make a bad decision. It's when you don't take those steps that you expose the community to liability. Like I mentioned, it doesn't mean you're not going to get sued, or that there's no possibility of being sued, because if somebody feels wrong, they're going to sue the association. It means the association can be protected, or is protected. It also doesn't mean you didn't make an error in your decision. Directors and officers D&O insurance is directors and officers errors and omissions insurance. We did make a decision. We did seek the advice of experts who said, yeah, that's cool. We did make the decision in good faith in the best interest of the community. However, something went wrong with that. Somebody possibly feels that the CC&R was breached. There was some negligent action on the part of the board, and it can be shown that, oh my gosh, we overlooked something. We made a mistake. We made an error in our decision. We're terribly sorry. What can we do to rectify that? How can we rectify that? And whatever the lawsuit is going to be, it's going to be a dollar amount, because everybody has a price. But importantly, you made a decision as a group, as the board of directors. If you are a board member and you act outside your scope of being a board member, you do something on your own, you make a decision, you sign a contract, you pay somebody a service fee, what have you. If you do that without any board involvement, you're acting all alone, and you are now personally exposed to liability. So staying within making decisions as a board of directors and following that is critical to you remaining protected. Now, you as a board member are not the only thing or person who is included as an insured. First of all, you got the association that's an insured, is the insured. Your spouse or significant other is an insured. Employees of the association are insured, are defined as insureds. Committee members are defined as insureds. Volunteer committee members are defined as insureds, as long as they are volunteering on a committee that was created by the board of directors. Board of directors says we want to have we need to have an architectural committee. Okay, architectural committee. Then you have an architectural committee. Those members serving on the architectural committee are considered insureds. There's also language for past, present, and future board members to be considered insureds. That helps because we don't have to keep necessarily keep an up-to-date list of board members in or on the policy. Most brokers will ask for a list of the board members so they know if somebody calls and says, I am a board member, check a list and say, no, you're not. Or yes, you are, and I can give you more information. Because in general, a homeowner doesn't have access to some information that the board would, because the board is the operating entity for the association. I'm dealing with a board member right now who's having a really difficult time understanding where the line between the association's insurance and their personal insurance is. There's a misunderstanding, miscommunication that we're going to be working through, that it feels like this board member is trying to make sure their personal assets are protected by the association's insurance policy, and that's simply not true. The association's insurance policy protects the association, and it protects the board of directors for the decisions they're making for the association. It doesn't cover your personal assets. That's why it's important to act within your scope as a board member. The coverage that a D&O policy provides is incredibly vast. Or I should say broad, not vast. There's really a lot of stuff. It's almost hard to imagine something that would be flat out declined or denied, though I can. The important thing is that the carriers in the preferred marketplace have what's called a duty to defend. So they receive your claim, or the claim that you've reported to them, I should say. And then they would start defending the association, doing some research in their policy to see if the allegations in this lawsuit could potentially become a claim, or could potentially become something they would cover. If it had to go to trial, assigning defense counsel and doing all that stuff. The duty to defend is at the very beginning of the investigation. The carrier is defending the association. They will issue something that's called a reservation of rights letter. And that letter just says, we're defending you, but we reserve the right to remove ourselves, to deny this claim and not pay anything after review of the facts and after review of the policy. But again, the policy is so broad. It's actually one of the reasons why you will see, if you see a lawsuit, it's not just one allegation. There's going to be a ton of allegations that sometimes I've seen 12 to 15 in one lawsuit. And not because they all actually occurred, but because the attorney is trying to get something to stick, because they know if they get something to stick, the association will need to defend itself. And there's always a possibility of getting some sort of payment out of that. There are key exclusions. Bodily injury is not covered. So if somebody gets punched in the face or trips and falls on the sidewalk, not covered by D&O. That's a general liability claim. If you know about something and didn't tell anybody about it, and then you report it to the carrier, that's not covered. We call that known prior acts. You knew something was going on that should have been reported to the carrier and you didn't do it. And the carrier will say, well, you knew about it. You didn't tell us about it. So we're not covering your loss. We're not defending you, I should say. Claims against board member claims are not covered. The associations or the insurance company isn't going to cover the bickering and disputes that one board member might have with another. Construction defect is not covered. It's not covered in general, actually. Property insurance, general liability insurance, directors and officers, work comp, crime. None of those covered construction defect. And any deliberate act that you know is wrong is going to be excluded. In today's world, the most important thing is to report the claim to the carrier as soon as you feel the need. Whether that need is somebody threatened me via email, or that need is we just received a lawsuit, a summons and complaint. Reporting to the carrier is essential to making sure you have coverage today. And that's because carriers have gone from, well, back that up. A directors and officers liability policy is written on a claims made form. That is, the carrier that responds to the claim is the one in place when the claim is made. It could have been something that happened a year ago and you didn't know about it, and then you get a lawsuit. It's not the carrier that was in place a year ago. It's the carrier that is in place now that addresses the loss. That's claims made. The claim is the allegation that the association or the board of directors was negligent in their decision making and it caused some sort of harm to another person, the third party. That's the claim. They, the third party, are claiming the association was negligent in their decision making. Today, we're not only claims made, but we are claims made and reported, which means the claim is made by the third party, and then it has to be reported to the insurance carrier within the same policy term. Let's take that example of a claim that occurred. Something happened a year ago. Let's just, for gits and shiggles, call it a breach of fiduciary duty. The association is alleged to have breached their fiduciary duty last year. But between last year and this year, there's no change in the insurance carrier, but the policy has renewed. If we don't report it during this policy period that we got the claim, and we wait till next policy period, the claim's not going to be covered. You have to report it, as the words are, as soon as practicable, as soon as possible. You have to report it. My advice: call your attorney, call your insurance broker, and give them some details and ask them, give me some advice. What should I do? What should we do? Your attorney's probably going to say, this sounds like something that you can probably tender to the carrier, report to the carrier, but contact your insurance broker. And 9 times out of 10, when you contact your insurance broker, it's because you think it should be sent to the carrier. And most of the time, 99% of the time, 99.9999% of the time, we're going to act, that is, the broker is going to act very conservatively. I see the threat doesn't feel as dramatic as it possibly could, but I'm going to go ahead and recommend that we report this to the carrier. There was a time when we could put a carrier on notice, meaning we would just have something in our file or send something to the carrier that says, hey, just want to give you a heads up. There's something that could possibly go wrong, and we want to make sure you're aware of it. Carrier would put that in a file somewhere, but that causes a lot of problems because there wasn't really a physical record of that notice. There are changes to board members. There are changes to insurance brokers. There are changes to community managers. There's changes to community management firms. And in all of that, there's an opportunity for somebody to forget this thing ever happened. So instead, what we do is we report the claim to the carrier as notice only. That is, hey, we want to open a file, but we don't want you to do anything with it. We just want you to chill and wait until the next shoe drops. And if it doesn't drop, fantastic. Then it'll be closed without payment. But the carrier then opens a file, assigns a claim number, probably assigns an adjuster for some small bit of investigation to see where this is, and then either says, okay, this isn't as dramatic as it might be right now, so we're going to go ahead and leave the claim open as notice only, but we're not going to do anything until something else happens, until you receive another document or the threat gets bigger. A lot of times that's the email that is received by the manager saying, from a homeowner saying, if you don't do this, I will sue you. That's a really good time to put a carrier on notice. That is, notice the carrier, I should say. And then the carrier will just kind of sit back and do nothing. And if it doesn't come of anything, then the carrier will be the one to say, we're going to go ahead and close this because there hasn't been any activity for typically 2 years. And if you hear of something, let us know and we'll reopen it. But we've already reported the claim. So it could be a year or two down the line and the policy's renewed twice. We still go back to the day we first reported it, the policy. We reported it in that policy term. So we're going to get some protection. If you have something like that and you have legal counsel, your general counsel working to try to resolve the issue, but it's not getting anywhere, the insurance company's not going to go back and pay your general counsel's fees if a claim ever gets reported. They're only covering fees that are incurred once they know about it. You're also running the risk of that claims made and reported period expiring. So if you are working with general counsel for 2 years on something, and then you report it to the carrier in year 3, the carrier is going to say, hey, you should have reported it to us back when you first learned about it. So it's not covered. It's incredibly important to report the claim as soon as you can. So in the process of defending you, somebody's getting paid, right? The attorney is getting money for doing the work to defend the association. The court fees, the defense costs are all, in most cases, at least today, outside the limit of liability. Defense cost outside the limit means if I have $1 million policy, that is set aside for judgments and settlements. The defense costs do not eat up that limit, that $1 million of coverage. If defense costs are inside the limit, then part of that $1 million worth of coverage is going to be eaten up by the cost of court fees and legal fees and all that fun stuff. Example, I have $1 million policy limit with defense costs outside the limit of insurance. We get $1 million judgment or settlement, I should say. And in the process of getting to that point, the attorney had incurred $300,000 worth of fees. The $300,000 are paid for, and we use the $1 million to cover the settlement. If defense costs are inside the limit and that same loss occurs, $300,000 of our $1 million is going to be used up to pay the attorney, and then we'll have $700,000 left over to put towards that $1 million judgment. We're short if defense costs are inside the limit. So we would have to special assess, most likely, the membership for the rest of that money. There is a trend, maybe not a trend, more of a rumbling in the market that is carriers are considering either moving defense costs back inside the limit, because preferred carriers offer them outside the limit, and that's very positive. That's where you want them, because they're essentially unlimited. Carriers are thinking about moving them back inside the limit or setting a separate defense cost limit, typically would match the limit of insurance on the policy. So if I have $1 million policy, I'd have $1 million worth of defense costs, because these losses are getting extraordinarily high. There's a lot of defense. There's a lot of money being paid because attorneys know how to work the system to keep the claim alive. There's a very high settlement judgment demands that we haven't seen. And the premium on a D&O policy for an association that has little to no claims is low relative to the exposure that the carrier is picking up. So they're thinking about moving the defense costs inside or setting a separate limit for defense costs to help motivate settlements and judgments and not allow things to just continue on down the road. There's another condition of a D&O policy that's called a self-insured retention, SIR. A self-insured retention is a portion of the loss that the association is self-insuring for. It's different. It's the D&O version of a deductible on a property insurance policy, but it's different. And it's different because you have to cover that cost first, and then the insurance company will step in and start paying the attorney's legal fees and any other costs. That's the self-insured retention. Sometimes, typically, it's around $1,000. Now we're starting to see those be $5,000, $10,000, even $25,000 retentions. Again, to help the insurance company really not incur so much expenses on their loss. So what's the moral of the story? The moral of the story is follow the business judgment rule. Make decisions in the best interest of the community in good faith and from the advice of experts. Follow the advice of experts. Report claims promptly to the insurance company. Doing those things will transfer that risk of the liability to either the insurance company whom you've paid to provide this service, or to the service provider, your insurance professional, your legal counsel, for them giving you the advice that you need to act on. If they give you bad advice and you follow their bad advice, guess whose liability is exposed? Not yours, theirs. If your landscape or your arborist doesn't advise you to trim those trees twice a year, and you continue as is, and a tree falls and somebody sues the association, there's a potential for that arborist to be the one who's liable, because the arborist didn't give you the proper advice. You acted on you did what they said you should do, and then something bad happened because they failed to give you advice. So transfer that risk effectively. You never know what someone else is going through. You never know what they're dealing with inside. Recently, a very close friend of mine was struggling, but wasn't sharing. And it wasn't until basically the last straw, if you will, that she shared that she's just been thinking about her mom, and her mom passed away about 7 years ago. But she's struggling with it because she misses her mom, as well she should. But that struggle was getting in the way of other relationships. And nobody, when you don't share that difficulty you're having, it tends to come out in behavior. It tends to come out in depression, in my experience, anxiety, a fear of loneliness, or not fear, but a feeling of loneliness, that you feel like there's just no help for you. So when you are struggling with something, please speak to someone. Talk to someone. Doesn't have to be a therapist, though that's oftentimes the best way. A close friend, a family member, spouse or significant other, someone who can and will listen to you and not try to solve your problem or make it go away, but can help you with coping with that pain you're feeling right now. And for the rest of us, ask someone how they're doing. Honestly ask. Care about how they're doing. There's not enough, in my belief right now, there's just not enough love and trust and kindness and goodness being expressed. It's a very binary society right now, and close friends and family members are ending relationships because of it. Care about others. It's a really easy thing to do. Ask them how they're doing. Tell them something nice. It could change their life. So thanks for hanging out. Remember to like, follow, subscribe, and we'll see you the next time on Covering HOAs with One Hot Mic.